Hello, and I welcome you to today's Trading Spotlight webinar together with Admirals. It's Friday. It's the 21st of July, 2023. And we will cover once again the US market opening. Earnings season just kicked off already last week with the financials and banks, JP Morgan, for example. And this week we had Tesla, we had Netflix. Next week is the big tech earnings. Very interesting that yesterday I just learned that Amazon, well, they don't really postpone their earnings release, but at least it's the first time, I think, since 2018, if I'm not mistaken, that they don't provide their earnings in the last week of July. And that's something I'm telling probably they're about to disappoint. That's something to keep in mind, at least when we get the release here then in around 2 weeks from now. But today we want to especially focus on what's hot today, what's in play today. I think American Express is a good one, something we want to keep an eye on. And then I have a potential technical breakout play, one which crossed my radar yesterday in the evening. In fact, you probably have seen it. Equities were under selling pressure. Especially the Qs, the tech sector, selling pressure that wasn't really risk off. That was just a technical reaction, I would say. And like we went really strong over the course of the last weeks, in fact. And it was just a question of when we will see finally a pull in. And yesterday was the day. And we finally dropped. And then there was one stock which was extraordinarily strong already in the last 2-3 weeks. It was Rivian. It's a potential competitor, probably longer term at least, from Tesla in the e-mobility sector, holding clearly above a key support, and not just that, but trading around its potential breakout area around 2650 around. Right now trading above that level. So there's a potential breakout. And yesterday, in anticipation of such a potential gap higher and potential break, and given the strength, I have Rivian already a trade on for today, and we'll guide you through this. What's the plan? Let's see how the open how it comes in, how we develop from here, if we walk through on the upside. This is already the first thing I'd like to mention here. So this is the risk disclaimer. Please read it carefully. Make sure that we are looking here at leverage products, CFDs, and that there's risks involved when trading the markets with leverage products. That is not suitable for all investors, and that you please understand the risks first, and then download the demo at admiralmarkets.com. And then test whether your personal risk profile corresponds with the risk involved when trading CFDs, and then take it from there. If you have further questions, feel free to reach out to Admirals. Today, I will present you real trades with real money, so no playing around here. Everything you will see is my trading, my personal trading, but still, it's not a financial advice or something. It's purely educational. It's purely informational. Take your time to ask your questions. Also, if you like what I will present to you in terms of Rivian, in terms of XP especially, so American Express, for example, and whatever, please ask your questions, take my thoughts, formulate a game plan around my thoughts if you want. But if you take a trade based on these, you take full responsibility, and please make sure that you understand all risks involved when trading, especially with leverage products. So there's no financial advice today, purely educational, purely informational. And I think I don't need to introduce Admirals further. I think Theo did already a quite awesome job here in this regard. Check out the website, admiralmarkets.com, for written details. Also here, one world, one broker, fully regulated around the globe, SISEC regulated, ASIC regulated, what else? FCA regulated in the UK, for example. There's also a regulatory body overseeing the business of Admirals in Jordan, for example. What this could mean for your trading, please feel free to reach out to Admirals directly. Here, it's also an offering from Admirals in terms of stock trading, fractional shares. What this means, all details are on the website. I want to head right over into my chart, where you can't right now, you can't see any action because the market is not yet open, and we're focusing here on the Wall Street opening at 3:30 German time, PM German time. But I want to guide you through my overall layout so that we are all on the same page. You can see, first of all, the symbols here, they change each day depending on what I consider to be hot for the day. I don't like an overwhelming amount of details being or having it here, but I want to have a clear overview. Yesterday, Tesla was in play. So I still have Tesla here on my radar, potentially giving up. Key level will be 270, 271. If we're holding above that, then probably yesterday's short drop or more aggressive sell-off, let's say we are done on the downside. There's also something very interesting. Let me probably share some thoughts here on that. Let me just see whether I find the link. 1 second. Where do we have it? In the morning, there was a great tweet I saw. This is something we will look at in a few seconds. In terms of Tesla, you're probably wondering, hey, is it a potential play for today? We won't cover it. I won't trade it today. But there's some very interesting statistics around it. TrendSpider, an account I probably recommend following. If you're on Twitter, you can see here 300,000 and more followers. And they have some tremendous technical outlooks and also statistics. As you can see here, covering Tesla from yesterday, over the last 2 years there, right? Tesla has fallen minus 9% or more in a single session, just 8 other times. Again, very important. They reported earnings Wednesday after the close, and the earnings were strong. I think the guidance was strong. I think the earnings call was strong. It was very surprising to see Tesla selling off that aggressively, even though we have to say, especially since the annual shareholder meeting from mid-May around, we saw a massive run higher. I think we traded above 100 USD per share higher compared to the last earnings release. And the interesting thing now is for us as traders, short-term traders, you can see the following day, if this happened, we were green 63% of the time, providing an average return of 2.17%. Just for informational purposes, doesn't mean that we will close green on the day, but at least let's see whether we can make it back above 270, then probably with some bounce in the NASDAQ overall after yesterday's drop lower. Probably also Tesla will look for a bounce here. But as you can see, coming back now to the overall layout here, you can see these are my quotes. Rivian, AXP, these are the stocks I watched today. Rivian, because of the technical breakout, we will cover a little later. AXP after earnings. And then you can see here, there's a 5-minute chart, we have a 30-minute chart, and we have a daily chart here. So this is for the overall picture. Where do we stand? Especially, are we headed for a break above, for example, a technical level, which is of interest, in addition to the overall fundamental catalyst, and so on and so forth. This is the mini terminal I have here. You can download it for free on admiralmarkets.com. Let me just check out the website here, admiralmarkets.com, and share the link to the Supreme add-on. So if you want to build platforms, and then we have here the Supreme add-on. It's for free. You can download it for free for MT5, for the MT4. It's a add-on. Where do we have where's the Zoom? There's Zoom. 1 second, and there's the chat. And then I call it SE. Let me call it SE, share it with all, SE. So you can download it here for free. And so this is for my trading in this case. So I have the shares here, for example. I will enter. Let's see how many shares I enter. I will guide you through this, how I calculate my risk in a few minutes. Well, then I take it from here, in fact. So I have an overview of where do we stand in the overall market. I have an overview here in the XP daily chart, for example. You can see we found some resistance on the upside, for example, around 180. Right now, we're getting lower to around 170. So this is, in fact, below here, 172, which is kind of a key level. And the average price, I will guide you through this, is around 170, 150 around. And so if we're breaking here below that, next support comes in at 168, and below 168, you can see here the line at 165. So this is how I get to the levels on the downside, which levels to watch, even though the fine-tuning, the decision whether I enter the trade or not, this is done via TradingView. And here via TradingView, I have the share open, and then you can see there's a orange line and there's also a purple line. I will tell you what this is in a few seconds. There I go. Most of the time I go to a 2-minute chart, 1-minute chart, depending a little on my overall view on a chart and what I play. So momentum scalps, especially if I trade very short term, it's a minute chart. If it's a longer trade, let's say, or get a better view, especially after 4 p.m. after the first 30 minutes of trading, I will how can I say that to filter out the noise, probably that's a good way to put it, or filter out the noise a little better. Then a 2-minute chart seems more appropriate in this case. And I especially look here at this chart because here I have true volume. It's a true stock traded at the NYSE with the true volume here. And this is, by the way, something you have to buy. It's nothing for free. It's only €2 or €3 a month or something, in combination with the premium. No, it's the pro version, I think, here of this charting platform. And also I want to highlight the pre-market to see which level might be of interest. This is something we get through in this a few seconds. And I focus here on this chart. And then if certain levels, thresholds are met, respectively broken, for example, and we are holding below a certain level and there's volume coming in once we take on the initial momentum or something like that, that's my sign. And this is then when I enter the trade here within the trading terminal. But this is just to get an overview. Where do we stand? To have a rough overview. The timing of the trade itself takes place via TradingView and via the real volume we can see here, and then taking it from there. There's again this orange line. This is the volume weighted average price. So this is the line you can see, given the average price based on the volume which was done on price XYZ. And you have in purple, you have another VWAP here in this case, but it's the anchored VWAP in this case. By the way, it's 2, just like taking out 1. And what do I do here? You can see the earnings were released, as you can see here, at around 12:30. I'm not 1 p.m. 1:02 p.m. German time in this case. So what I then do is I anchor such a volume weighted average price here on this level to have an average price being displayed, which market participants paid after they learn about the earnings. And this is my line in the sand. In fact, this is kind of an inflection, let's say. So saying, as long as we trade above, bulls are in control or buyers are in control, while if we drop below, then sellers are in control. So that depends a little on what is my current bias. So my bias on the stock, coming back here, you can see slightly above that, around it. So no clear advantage being found right now. But if I have to give an idea already, and I'm not surprised by the gap lower. So earnings were okay, but it's not very strong. Most of the time, most of it could have been expected, let's say. We're finding stronger resistance here around 180 in the overall, in the bigger time frame. And we're gapping lower. So that means, well, even if earnings were okay, the market earnings were okay. You can find them, by the way, on my Twitter account here. Twitter handle is @JensKlattFX. And there you can see the earnings. So EPS came in better than expected. Sales disappointed, 1505 against estimated 1548. Network volumes plus 8% per year, reaffirming FY, so full year 23 outlook for the EPS, and also revenue growth, which comes in as expected. So coming in as expected and being bullish into this earnings release, let's say. So after the recent run up, and let's say AXP is not the most volatile stock, it's not a high beta stock, but it's a value title in this regard. So if we are trading then from here around 20% higher into a strong area of resistance and numbers confirm what market participants were already expecting, chances increase that there's a kind of a buy the rumor, sell the news event, even if numbers are okay in this regard. And this is something I would say we can right now see, and why the market, as you can see here again, why the market is dropping. So BS is all in all short, but still, you might still probably wonder, why is he focusing on AXP? Why? How does he know that earnings were released, respectively? Why does he think that earnings are of interest for market participants? And this is exactly where the who's hot, who is not from the topic of this webinar comes into play. So first of all, I need to know about the earnings releases beforehand, probably 1 week earlier, which are the next week's earnings. And I can say, I'm not 100% sure, but most likely Earnings Whispers here will release the calendar with the earnings next week on their Twitter account within today into the evening, something like that. So at least Central European time evening around. And as you can see here, so today is Friday. American Express obviously released earnings before the market opened. I could also here look at what happened yesterday. That was something, for example, Thursday, yesterday, I was focusing on Tesla, Netflix, because they released earnings Wednesday after I was closed. But today, respectively yesterday, only AXP here in this regard seems to be of interest. Or at least I imagine it could be of interest, even though I still don't know. And this is now where the pre-market screener at MarketWatch comes into play. This is also a tool which is for free. I call it PMKT here in the chat box for pre-market. And so what you can see here is, interesting enough, AXP does not appear here. So I know AXP is potentially releasing earnings. That's something I know, but still it's interesting to see laggards. It doesn't appear here. That might be the case because the gap we are seeing here, the change is not plus minus 3%. This is the first catalyst I want to see. So the gap up, gap down has to be plus minus 3%. And in addition to that, there needs to be volume being done in the pre-market compared to what's on average done. So let me just scroll here and see, there we go, AXP, but not a gap of 3%. That is a minus, in fact. It's not giving me a check, in fact, and leaving me a little skeptical whether this is a potential interesting play. It's at least something which will result in me reducing the position size. I go through this in a few seconds, what this means. But as you can see here, so far around 585,000 shares are being traded. And now I want to compare this to something. So because this is what we've seen so far in the pre-market right now. And then I go to Finwiz. Let me check share here, Finwiz. It's also for free, by the way. Finwiz. And here I have a ton of fundamentals here being found. And there you can see, for example, the average volume being traded in the stock, 2.87 million shares per day. For the last 3 months, average trading volume. So they can see, if you go there, you can see average volume, 3 months, 2.87 million shares. And this is something which definitely has a check, because if right now we already see 600,000 shares being traded, this is around 30% of what we do on average, or 20%, something like 20%, probably a little more than that. On average, what we do per day over the course of the last 3 months. So that means that everything we see right now is significant, especially with the fundamental catalyst we've seen with the earnings being released earlier. So the stocks obviously in play is potentially hot. And this is how we get there. You can also, I love this. I will show you why. So we are probably not trading AXP, but who needs AXP if you're trading Rivian? But let's see how the open plays out. So AXP, I'm sorry, now I got lost a little. Other place, potential place. You could probably also have a look here at Commercia in this case, so CMA. That's also a stock we probably could have a look at. 570,000 shares being traded, 6.08% higher on better than expected earnings, I think, but I haven't prepared this. So I was already focusing on AXP. Usually what you have in the earnings, in the earnings calendar is a first idea on what's the most interesting play, second, and so on and so forth. That could sometimes differ a little. So yesterday, for example, I was focusing on American Airlines, but here you can see, so Commercia comes in here third. I haven't prepared it, just to put it that way. Let me just see, do we have liquidity for that? That's something probably which is of interest. Yeah, there we go. So we could also now pull up here CMA, but I haven't prepared it, probably most likely because I was where I am more focused on Rivian right now, which is also a stock which is potentially in play. Probably because this is what we will focus on here in a few seconds. Probably we should By the way, let me just go here through my sheet first, and let's update the slide to have a game plan. That's very, very important. So let me just check here. So Rivian, this is here, 2.2 million shares being traded. So obviously very, very interested. Market participants in the stock, gap of 3%. And then we have AXP. Let me just here type it down. It's 619,000 and a gap of minus, where we have it, 2.83. So there we go. So let me just guide you here through my Excel sheet. So I fill this in every day. And it's for me, it's very important to be well prepared for the day. So what I do is, first of all, the ticker symbol I'm watching, AXP, Rivian. Then I have the levels of support and resistance, which I pull up here. I guided you through this a few minutes ago in regards to AXP. Y70, for example, 168. Probably here we have to bring in 165. And also on the upside, 174, 175. The reason for that is due to 174, for example, being the low from yesterday, and 175, it was around the support I think we found somewhere in the afternoon. So let me just here pull up the chart again. So here, this is the area 175 around. We are looking for here, and this is how I get the levels. And so then I have the news. Inflection is 173. You probably wonder, it's the AWeWeb in my case. So like earnings event, this is my anchor, and then I have the average price being paid from there. And then I say, well, if I'm short BS, if I look at a pull-in or the market to trade lower, I want, in this case, the stock to hold below this average volume weighted average price, below 173. This is the price which was paid on average since the earnings were released. And then I want to see the stock holding below that level, which is currently, as you can see, and that's why it's not of interest for me anymore. At least not now. Let's see how the open plays out and if we drop that level. But you can see we are holding above this, in this case, purple line. It dropped a little, by the way. When I prepared here, we were holding a little higher. So this is something I want to see. Probably we need to adapt this and make it 172 in this case, 170, 150, yeah, around this area. That's okay. The earnings, the numbers, and then you can see here, I fill in data around the gap. ADTV, this is the average daily trading volume. So I pull up FinWiz and then look what's on average traded here with a stock. In fact, I did this in the morning. You can see that was 2 million, 2.9 million. Pre-market volume is 619,000. I have to have an idea of the ATR, average true range. And then I want to know the short percentage and the institutional ownership in this regard. We won't dig too deep into this, but that's definitely something to keep an eye on. For example, if you looked the last days on Carvana or something and said, well, isn't that an interesting short play against the highs? Yes, technically wise, it is. But trading wise, it's very difficult because it has a very, very high short float of 40, 50% something, which makes it very difficult to trade the short side because there's, first of all, it's very, very spready. So in terms of the spread, in addition to that, you have also difficulties after an aggressive flush. You see most of the time very aggressive bounces due to market participants covering into the flushes lower. In this case, it's not of interest for us. And then I formulate a game plan. I say, well, if we drive below 173 and we hold below the volume weighted average price, then I want to trade short, AXP short, into short pull-ins. First of all, I need to wait for 5 minutes probably. So we are not trading wide at the open, which is right now taking place. But well, I want to see the market developing first and then taking it from there. And then I have a second play. If we pop into 174, 175, the region I just mentioned, yesterday's lows, but hold below, we roll over and we drive back below. In this case, let me just go over here. XP, and we drop back below the purple line, respectively the orange line, then things get interesting from a short side, because obviously market participants can hold initial bullishness, and instead the bears take over, let's say, and we drop this price, which was an average which was on average paid from market participants, and then taking it from there. Right now, as you can see, we are not focusing on the market itself, or respectively on the trading platform, because we have to wait the first 5 minutes of trading due to liquidity providers not providing us with liquidity right now. So there's nothing happening so far. After 5 minutes, they finally give us quotes. The reason for that is sometimes, I'm not sure, probably we can see that here today. No, they started. But sometimes there's a delay from the specialists. You can see, as that's not the case for NASDAQ stocks, but for NYSE stocks, that the specialists don't offer prices for the first minute or 2 minutes of trading. And then finally, they give you a quote here right at the stock exchange, because they need to balance buyers and sellers first, and then make sure that they don't have to take too much risk on their own books, offering you liquidity. And that's why some of the liquidity providers say, well, 5 minutes should be fine. Then we deliver liquidity to traders here. And so that's exactly what we are currently doing. So focusing here, let's have a look at and how it plays out. So right now there's a drive lower. 170 comes into play. We formulated the plan for 170. That's the pop into 174, 175. The initial pop was around here, I think. Yeah, 70, slightly below that. We drive lower, and now the question is, can we see further pressure on the downside? Do we hold below 170? If so, short gets interesting, and then what we aim for 168, and then below that we aim for 165 on the downside. But again, and this is what this event is especially for here, we need to understand that it's the stocks we plan to trade, and we need to find the right stocks to play today, which is most likely due to potential catalysts, earnings releases, or interesting breakouts. And this is now where Rivian comes into play, because I have a trade on here, and let me just guide you through my thought process and what's the reason for the long position here. So Rivian didn't deliver earnings or something. They delivered deliveries here. That was around Tesla. No one cared about the Rivian deliveries, and they were quite strong. They were strong in terms of they potentially reaching their targets they gave for themselves of 15,000 vehicles being delivered in the year of 2023. So that was a strong number, and it was especially strong since the stock sold off aggressively since its IPO. So this is where I think it was early the IPO, but the launch here as CFD, obviously the history is not long enough. But we sold off aggressively. And the interesting thing now is that you find out that the stock is right now only valued at its cash and at cash equivalents they have. So if you look at Finwiz, what you can do, if you play around a little with the fundamentals, you can see here Rivian. So you can see there's a cash per share, and this is $11.64. So if they give out 801 million shares, or probably 930 shares outstanding, whatever you take, they have around 10 billion, 11 billion USD cash at hand. And if you then look at the chart, you see that here at these levels there, so now we get quotes, and then we'll see here's the gap higher. So we're trading around 27 already. I love that. In fact, what I will do now is I will update my stop and then tell you why. So I don't want to see it dropping below intraday lows. So 15, that's good. So let me just here place my stop at 15, and then why do I do it at 15? It's very simple. Let's look here. So this is Rivian. So this is the intraday low. So the flush low, let's say, which we are currently here seeing. And I want to hold the trade. I could imagine it to run up to 28, probably even 29. Why? In a few seconds, you get the idea. I don't want to see it dipping now below the intraday lows. So the gap high paid handsomely already. So I entered around 25.65 somewhere here or so. So 50 cents I have it, and then let's just see whether we continue to move higher from here. Hold 27 now and keep on moving on 28. But coming back now to here to this delivery gap. So they give you, so first of all, if you here look at the stock price, you see the market cap is around the cash equivalent they have at hand, cash, but there's no growth included. So this was interesting. So when they came out with numbers, deliveries which came in above expectation, and when it became clear that they will grow probably at the self-given targets for the year 2023. Well, the market had to readjust the value of the company, and then you see the stock going vertical and going up here. That was very interesting. So it was heavily traded, and it's one of the most traded stocks, in fact, over the course of the last weeks, in fact, with nearly 80 to 100 million shares being done every day. And this is very interesting. And what's even more interesting is I had this on my radar, and then I thought, well, after it went vertical, I was like, okay, most likely we'll see a pull-in rather sooner than later. That's very likely, I think, that we'll rather sooner or later see a pull-in, probably down to 20 and then taking it from there. And I traded it from the short side here. I traded it from the short side here. Once we drop below that level, 24, what was it? 24, 23.70, something like that. But I also played it from the long side after I saw that 24 held that was here for a push higher. And I made some money on it. Was really nice. And then yesterday, I obviously saw that 24 held. And when I looked at the charts yesterday and saw this potential sell-off in the overall market in the Qs, there was just one stock which was green and was deep green, with being up something like 3.5%, and it was Rivian. After we held 24 and after we went so vertical, holding 24, that was really strong. That was really strong. And I was like, you know what? This is about to see a push higher, and then let's see whether we probably follow through. And now you wonder why I said, well, why do I say 28? Well, the idea behind this is quite simple. I just duplicate this range. I just say, well, I could imagine this. First of all, yesterday the trade was based on we are potentially gapping higher, and let's see whether we can follow through. So right now, obviously, we are having some trouble at 27. And as you can see here, if I duplicate this range, you can see we are probably headed for even 29 on the upside. So this is how I get there, and why I think this could be a potential target on the upside. And that was the intention behind the trade. So I'm willing to take the risk overnight that we are. Let's see how things play out, but it was extraordinarily strong. So there was an elevated chance of a gap higher, I think, and that was the reason why I took the trade. Swing it overnight, and now, as you can see, we are gapping higher. We are attacking 27. We are seeing an initial flush into 26 holds. That's a potential breakout. It's also here a potential level to keep an eye on, because it was yesterday's highs, held clearly, pushed to 27. So I'm trailing my stop to this level. I want to see a walkthrough above, hold above here the volume weighted average price. Let's see whether this is happening or not, or I need to probably take another shot if I'm getting stopped now, but I have at least some money at hand, or a small gain at least to play around with. And that's in fact the idea of the trade, and that's why I took the trade and swung it overnight. Let's have a look here at AXP again. So that's in fact the idea. So nothing more to add here. We can also see that was quite interesting to see that here we had 2.2 million shares being traded in the pre-market, which is it's a lot, in fact. At least I think it's quite heavy. So it's obviously catching attention of market participants. And now let's just see whether we can follow through and make new highs. That would be the best case scenario in this case. So if we're making new highs now, if we can hold above VWAP, let's say. I mean, we are right now in the price discovery phase. So first 30 minutes of trading, it's like very spiky action. And then let's see whether we can follow through. I think I'd really love to see a closer to 27 consolidation, holding above 26, because it increases the chances of a push higher. And especially if here the selling pressure from yesterday doesn't walk through. So we are holding, in case of the NASDAQ, for example, we are holding above yesterday's lows, which can be found around, I think, 15,400, if I'm not mistaken. And let's just see. So it's really like, it's not a momentum play or something like that. but it's a play. I'm willing to hold, willing to swing, because I could imagine, and given what we've seen so far, that was a very strong sign all in all. Buyers clearly stepped in, even though we saw a very extended move. We held clearly above 24. We now, let's say we worked with this overextended mode on the time, and we reduced the extension on the upside over time. That's probably a good way to put it. And if the breakout is sustainable, and so far we are holding the breakout level, I would say, well, ready to go 28, probably 29, and swinging it, and let's see how we develop now, what not develop, but how we present ourselves around 27. So if we have trouble at 27, I could think about probably taking some profits, taking out some if we don't follow through. If we hold above 26, yes, but not really making new intraday highs, the overall market presenting itself weak, and then playing a little with the position, probably taking out some, probably re-adding if the momentum continues then a little later in the day, and so on and so forth. And that's it around Rivian and the current trade. Let's have a look here at XP. That's interesting. Look at this. This is interesting. So, well, we talked now a little. I wouldn't have taken this trade. I don't like this trade, but this is certainly a clear sign, probably to take into account for the upcoming minutes once we exit end the webinar in a few minutes. Very interesting. So we are dropping 170, holding 170, pushing back. Again, remember, the average price being paid from market participants from the earnings was this purple line, which can be found around 171. We spike into this level, hold below, make new intraday lows, and now breaking 170. I think this is a clear bearish sign. And what I'd like to see now is kind of a tight consolidation on the downside. Probably even below the pre-market lows around 169, but clearly below 170. Holding here, tight consolidation, and then probably go for a momentum drive on the downside. Down to 168, and if we drop 168, let me just go back here to XP. If we break 168, as you can see here, next target can certainly here be found around 165 around. So that's the level then to watch here on the downside. And that's it. So nothing more to add, in fact. So right now it seems as if some pressure comes up. Let me just check the cues once again. No, not so much. Not so much. But we're still failing in Rivian against 27. Don't want to see that. So now we are making new intraday lows. No, I'm out. No, that's it. So the trade is done. Yeah, it's through. Because this is definitely not what you want to see. You don't want to see new intraday lows. Let's just see now whether we can hold 26. Whether we can hold 26. That's the question, in fact. We have here. But this is certainly not what you want to see. That's certainly not what we want to see. You want to see holding above and then moving through. It didn't. We trailed the stop to the intraday lows. We dropped them now quite aggressively, I would say, and pushing back to 26. And now to re-enter the trade, because the thesis, I think, is still valid. But what you want to see is that we are now making it back above the volume weighted average price for the day. Bulls are in control and we are holding that. So right now that looks not very promising, as you can see. So we are now dipping here into the pre-market range. You just don't like this. This is not bullish. Bullishness is like you're seeing the opening drive. Okay, we're pulling in, holding the lows, pushing to new intraday highs. That's what you call bullish. This is not bullish. This is a lower high and we're dropping the volume weighted average price. So no reason to be long anymore, at least not for now. Probably this will change then in the next minutes. And this is now very interesting to note here in terms of AXP. Again, what you want to see now is probably 10, 15 minutes, probably timestamp, probably not such a bad idea. Saying, okay, for the next 15 to 20 minutes, and after 4 p.m. German time, in this case, so CEST, you want to see holding below the pre-market lows. If we can hold here and tight consolidation occurs, then I'm probably willing to take a short with the break lower out of this range, and then see whether we can continue here downside to 165. That's probably a play I would like to play, but this needs time to develop. So right now, no need to act here so far, but there's a clear sign that sellers are in control right now. Bearish opening drive, 170 holds, holding below the volume weighted average price, anchored to the earnings release, holding below, bears are still in control, dropping to new intraday lows, consolidation now, and then taking a short. And by the way, that's something I already wrote down here. As you can see here. Oh, no. Oh, I'm sorry. No. Holds below 173. So we need to adapt certainly the numbers here. It's 170 in this case. Then short out of tight consolidation, you can read here. Tight consolidation, that's something I mean, or shallow pull-ins against, or shallow retracement here towards VWAP in this case. And then taking a momentum play on the downside. That's also a nice way to go, in fact. And let's close with a final look on Rivian. Right decision. You can't ask for more. So the market delivers a clear sign here in this regard. So it's a very clear sign. We can follow through on the upside. It's not weak, still not weak. Let's face it. So we are still holding here on the upside, yes, but you're not willing to take any further. You just don't want to be long anymore, for obvious reasons. So because this is not bullish. Bullish is higher highs, higher lows, and then taking it from there. This is not taking place, but we are trying to break out, gap above the range, and then we are sold back into it. That's not a bullish sign. And so that's it. From mine, I hope you learned something. I hope you got something out of this webinar. And I really look forward to talk to you again then next week on Friday, and wish you a nice weekend. Happy trading, watch your stops, and talk to you again next week. I really look forward to it. See you. Bye-bye.